All right, welcome back to the program. It's time for us to delve into our conversation. And I'm looking at the capital markets issues today. So many matters arising. Dayo Obisan, who is the Executive Commissioner Operations at the Securities and Exchange Commission, is with me right now at the table. Welcome to the program.
Thank you for having me.
And thank you for coming. Let's get started. The CMC. Okay, let's be basic and primary. What's the CMC?
So that's the Capital Market Committee. So that's the committee that holds where the regulators interface with the markets and market leadership. That's where important policies are discussed, the focus of the regulators are exposed. And you have a JOJO, deliberations on different things, activities in the market, different developmental initiatives that have been jointly formed. And you come up with very formidable and actionable points, which we keep tracking over time. And it's held once every quarter.
Every quarter, so 4 meetings a year?
Yes, basically that's right.
Okay, so can you just speak to me in a nutshell, in 1 minute, what really happened? I understood it was a virtual meeting. Yeah. So in 1 minute, what really happened for Nigerians perhaps that didn't know that meeting was held, and perhaps the intricacies of the meeting, why that meeting is essential, some of the things that we say in just 1 minute, then we'll dive into the details.
Okay. At the meeting, several issues were discussed. Things bordering around the market, and as you know that the SEC is the apex regulator, and you have two main mandates: to develop the market and to regulate it. So regulation will talk about policies, the rules, the law, and developmental policies or initiatives. The one on the commission side, what the market thinks about it, different committees which cuts across the market, and the regulators, they give reports as well. And that's when the focus of the regulator and what's key next steps wants to take over the quarter, over the year, or going into the midterm or long-term future are discussed or exposed to the market for their initial reaction and for their information and collaboration going forward. So that's in a nutshell what happens.
Okay, in a nutshell. So let me take it from this angle, the Capital Market Master Plan. Let's take it from there, because I know that is what the SEC is currently also working on. I think it was the 2014?
Yeah, 2015.
Yeah. You know, and this 2021, so I think 6 years down the line. It's supposed to be a 10-year master plan.
Correct.
Isn't it? So where are we on that? I know some of the initiatives have been met, but speak to us about some of the things currently ongoing, some of the things also that have been met.
Okay, all right, for the master plan, it's like you rightly said, it's a 10-year master plan, but nothing is static. I mean, human beings are in a continuum of movement. So currently we're reviewing the master plan in face of current realities, because I mean, when we sat down around the table across the market and we discussed some of these things, that's 6 years ago, just as you said. A lot of things have happened. Technology has taken a bolder front burner in our discussions, and how things are emerged and how operations in the capital market are going on. So right now, even once I step out of this studio, I'll be joining my other colleagues back in the office, because we are currently reviewing with some participants in the market, some consultants, looking at the capital market master plan, where we are. In terms of achievement, well, a lot of quite notable things have been done. It's not like we are like 100% there, because when we took stock around November, December, we looked at, said, okay, if you say we are like 50–55% based on track of what we're meant to do. But again, it's worth mentioning that a couple of initiatives which were formed went back then when we launched it in 2015, started yielding fruits. Part of it is the commodities ecosystem. Several initiatives and being bolder and taking more advantage of non-interest capital market products. And just as you've seen the increase of growth in people accessing sukuk type bonds, which is one of the most formidable ways of approaching the infrastructure challenge we have in the country. So that's in a nutshell how we've gone. So what has been done, we're reviewing it just to recalibrate and make sure that we are not just using an old template to face a current new or more dynamic world.
Are there some things that may have changed in the pre-existing master plan as a result of the change occurring in the world? Nobody ever thought that there would be a pandemic in this kind of century, because people thought that perhaps we've advanced medically and all of that. Yes. So are there some things that perhaps COVID changed, or COVID may recalibrate for you, or there are some things, initiatives that you and your colleagues or the DG will say, guys, I don't think this is necessary anymore, because I don't know if you and your colleagues or staff at SEC are working full-time now. Some of you could still be working virtually and all of that, because I also know that SEC came up with some things that companies can do their AGMs virtually. You see, those kind of things. So are there some initiatives that have been tweaked as a result of COVID-19 pandemic? Oh yes, most definitely. The COVID came with a mixed bag of blessings. So let's put it that way. I like yes, I'm quite optimistic. Totally no, not totally. Just mixed, just not totally negative. Because, for example, and just as you rightly pointed out, it put use of technology as not just a necessity, almost compulsory. Because now, through the pandemic period, regulatory actions were still going on. Activities were still going on. The market didn't stop, not even for 1 minute. And the market even recorded gains at the end of the year at some point. So it gave us the opportunity to test the business continuity plans of some of the operators on their own purview. And even the regulator itself, it gave us the opportunity to even test ourselves, how technologically sound we are. Can we even continue if human interface wasn't possible? The only huge side on the regulatory side that got affected was the market growth side, because that involves, to a large extent, physical social engagement. Yes, and that got a little bit impacted. But by and large, it helped. In terms of, you have a lot of the exchanges right now, they're still working between 60 to 100% work from home policy. And things haven't stopped. Markets, people are still trading, people are running, as opposed to before now, where technology was an option. Now it's the mainstay, and physical interaction is an option. So as a regulatory body, have you guys evolved? Oh yes. And when you did the scorecard yourself, did you guys really tell yourselves the truth that we also need to evolve? Have you guys evolved? We immediately evolved as well, because as we are quite collaborative. So we engage. So that your stakeholders don't evolve more than the regulator? No, they don't. Well, we just try to be at the same pace so that their own level of advancement and growth is matched, if not superseded, by what or surpassed by what the regulator can do. So, for example, immediately the lockdown, the first one, we went to electronic submission mode. So instead of having people send in letters, hard copies, you could file with us electronically. Responses were obtained electronically, electronic signature. And that moved things. And now we have now adopted that as in, wait a minute, this is more efficient. This helps. Corrections are easily taken. And it makes work move even faster. If we take a look at some of the initiatives, can we just break them down? Perhaps for some, such as the materialization of share certificates, introduction of the e-dividend mandates system, and what have you. Direct cash settlement also. Can you just speak about that, and perhaps what some of those things mean for our viewers right now, the audience? That, because I get a lot of mails or even calls. You know, see, my parents bought shares. I don't know what to do with them. I've not seen my share certificate. You know, those kind of stuff. Okay, I think this is a very good opportunity just to contribute our own quota to financial inclusion and investor education. See, the first step towards problem resolution is problem identification. So a lot of us hear about unclaimed dividend and the huge figure be bandied around in the papers. And so if you take a step back, what leads to it? Somebody buys shares and the company pays dividends. The company pays dividend and moves it to a registrar who is meant to pay you the dividend. And dividend is just a cash fraction which the company has declared. Now, if you buy the shares, so what could possibly go wrong? You buy the shares and you don't remember you have the shares. Or you buy the shares in a company that has metamorphosed and changed it to another company, you don't remember, I bought in company A, now it's called company B. I don't even know the correlation between company A and company B. Secondly, they now move it to the registrars. 2, are the registrars paying on time? Do they even know who to pay? Because when you buy shares, your name comes as Mrs. A, and they know you have X number of shares. But the additional details which will help that with if you had your BVN and your account details, so they could credit you. Then the third part of it, is what is the regulator doing just to make sure that that process is seamless? So the first thing is, 1, if you had bought shares in any other name, pseudonym or in some alias in some past,
we gave, we came up with an initiative that, one, you need to consolidate all of this. So you have to come forward and let the registrar know that Dayo Obisan is the same person as Obisan Dayo. You have to show evidence. And once that is consolidated, then we now know Dayo Obisan claims his own dividend. And Obisan Dayo, since he's the same as Dayo Obisan, will go into the same account. But secondly, I as an investor, because when we talk about this, on the faces of the newspaper, studios just as this, we look at the regulator, we look at the operators. But the investor themselves, they have a burden. They have a responsibility. If you can put out your own money to buy some shares, then take the pain to leave them with your account details, and so they will know who to pay. So the third leg, which we worry about or we are saddled with, is to ensure the people that are meant to pay you, not only pay you on time. So for example, I think 2 or 3 weeks ago, we released another rule mandating that every registrar, once it is declared and is transferred to you, you must pay within 48 hours. Yes, so those are one of the few steps.
So if you're a shareholder of a company and your company has declared a dividend, you should be expecting that dividend paid within 48 hours.
Correct. You should expect that. Registrar. But I will encourage all the viewers and everybody watching us, you need to do your own part. Complete the e-dividend form.
How do you get the e-dividend form? I want to be as primary as possible.
Yeah, okay, definitely. So you have your registrars. On their website, you could download the forms. You could come to the SEC website as well to download the same. Banks, some banks, I know they have. Yeah. So it's readily accessible. And you can always reach the SEC or any of our helplines. I mean, just info@sec.gov.ng or just drop us a mail, open our website, our information desk, our help desk. Just call us and lay your complaints, or we could put you in the right path of what to follow and how to make sure. And not only for the current dividend. Once you have put in your details, all your past dividends gets paid to you as well. I mean, we continually get, should I say, testimonies of people coming back to us that, I completed that e-dividend form. I didn't know. I mean, I got paid 800,000 over the years. I mean, this could have been something they had bought. They don't even know how the level of metamorphosis that happened in the company, or how many names it has changed, or how many, because you could have bought 10 shares. That shares could be 20 shares today because there have been bonuses added to it. So you might not be able to even estimate, because if you are not getting your dividend, more likely you don't even know any other, you're benefiting from any other corporate action, which includes bonus as well.
So should I say that what came out from SEC just a few days ago, it's around reducing unclaimed dividends? Are there other actions that were taken by SEC? Yes,
at the CMC, we discussed several other issues. Unclaimed dividend continues to be the front burner for us because it speaks a lot to investor confidence.
And with what the government also came out with, that if you have, they're going to be going into our dormant accounts, unclaimed dividends and all of that, so Nigerians are so worried about that.
Yeah, so worried, and we have, I mean, this is almost like a 6-7 year journey, active journey for us, and we're still on with it, because our own fortune and our own success even ties to the thriving or the prosperity of the investor, as well as the survival of the operators themselves. So back to your question, there are several other things that were discussed. We talked about use of technology and the impact of COVID, how the market is faring as well, just as I pointed out earlier. A lot of the capital market operators, I dare say maybe north of 90%, have adopted technology in their operations. So which gives us a bit, and we've tested in some cases the business continuity plans, and they forwarded that to us, I think, about the second quarter of 2020, and some of them have been tested as well. Now, that makes me come back to one of the things I would discuss about the KYC updates.
Yeah, I was coming to that.
Now, these KYC updates, there have been different levels of initiatives, different actions that have been taken, not only to encourage the investors to update their details with their brokers.
KYC is know your customer.
Know your customer.
Those that are wondering what KYC is.
KYC is know your customer.
Know your customer.
And
the type you did for banks at the time. Because the banks did it, yes.
Correct. So, those, it is quite important to let the viewers know and to let the public know all these details that they have to complete is for their own benefit. As a regulator, yours is to create an enabling environment and to protect the investor. And you can only force the operators, that's whether the registrars, the brokers, or every other person that falls under your own direct regulation, to ensure that they don't frustrate that process, which is why at the CMC, one of the things we're very unequivocal about was that any operator that deems to, or seemingly, whether seemingly or actually deems to frustrate the unclaimed dividend process, will be directly and heavily sanctioned. And I mean, in several weeks, we'll start seeing some vivid steps taken towards that direction, because this benefits directly attributable for people that have come out of their own income. They've carved out an investment. They must directly get the benefits of that investment. And every person's activity must seem to complement the efforts of the regulator to ensure that they reap the fruit of their labor.
Let's still stick with this KYC, because even in the press release after the CMC meeting, the Securities and Exchange Commission noted that the compliance level is still low. Just about 4 million. In fact, let me quote the figure: 4,012,311 accounts with incomplete KYC information. What is the regulator doing to increase compliance level? Is it you should do more advocacy? Should you talk to your operators more? Are Nigerians not understanding what you mean? Or do they understand the adamant Nigerians? Are we always late to the party to do things? So what is the SEC doing to get this on track?
Okay, so we have a multi-pronged approach. So to the investor, advocacy. To the operator, that's where suasion and regulation and sanctions comes in. So back to that, for example, with the Central Securities and Clearing System, that's the CSCS. So that's the person that generates all the shares you buy, goes into that account, and you can access it through your broker or directly yourself. One of the things we have done is we partnered with the Association of Stockbroking Houses, and this is the body of all the stockbrokers, to say, if you can get a mandate to trade on an account, you should be able to get the full details of the investor. I mean, the same, if they're texting you, they might as well text their BVN and all their house address and all the other things. So we partnered with them, everybody, we are all on the same page. They have been trying to get that done. We are inching towards it. It is not even close to the level of success we want to attain, which led us to say by, I think, October last year, said anybody that hasn't fully sorted out the KYC, don't trade on the person's account. Yes, because if you want to give a mandate and you expect to do, remember, if you don't fully mandate or just complete your KYC and you trade on this, when there's a corporate action like a dividend, most likely you won't get it. And on the pages of the papers, you add your voice to say, oh, they haven't been paying my dividend. So, it's multi-pronged, and I'll use this medium to appeal to investors as well. If in doubt, speak to your broker, speak to the SEC, will guide you. It is really necessary, it's very essential. We are following, directly to my desk, I get monthly updates from the CSCS. That's where the figure you're quoting came from. Yeah, so we get monthly updates, and we speak to the leadership of the trade groups as well. Because we've like I said, moral suasion, we encourage them. They've done adverts out of their own income. They put adverts out in the paper. We've had them do scroll banners in their offices, even in registrar offices. Everything just to catch the attention of the investor, to ensure we encourage them to do this KYC, because it's for their own benefit, and it just helps our own work as a regulator as well.
Let's talk about this demutualization process. I just wanted us to talk about the capital market master plan before I go over to the demutualization process. The Nigerian Stock Exchange has concluded that is now being known as the Nigerian Exchange Group PLC. Explain to my viewers what this means, because, like I said, I've been saying it since Oscar Onyema, who was the former MD now, chief exec of NSA. He's transited now into Nigerian Exchange Group. What does it really mean, and how is the Securities and Exchange Commission, will regulations change? How would you also innovate with the new demutualization process that has created not just the NGX PLC but other companies? Okay,
for the demutualization, it's been a long time coming. So it's actually essentially a business decision. I mean, this is a company, a body that was limited yeah, by guarantee now, limited by shares. They now have like 3 main bodies. There's the NGX, which will continue the same exchange activities the NSE was primarily doing. They have the NGX regulator, which bothers itself around the regulation, and they have one other entity on properties or real estate or thereabout.
So the red code regulation. Yeah.
So now they will still continue as an exchange. They still obey the same exchange. You still trade your shares on the floor of that NGX platform. Everything still remains intact, but it's just that business decision of now they will have their own shares, which will become tradable. Before now, that wasn't possible.
What are your thoughts about the Nigerian Commodities Exchange? What's the SEC thinking about it, especially the repositioning? Because just some weeks ago, the central bank announced, of course, the repositioning of the Nigerian Commodities Exchange, that it owns close to 60% of that exchange. So what does the Securities and Exchange Commission think about that?
Well, just as many others were quite excited, it's a positive development, actually, because as you know, the NCX, which was formerly Abuja Securities Exchange, it's one of the 5 we have, though it's the premier one, it's the first one. We think this renewed interest by government at the CBN is going to invigorate things. I mean, if anything, it's just going to deepen the commodities space for us, which is in full alignment. It's one of the key things we wanted to achieve on the commodity trading ecosystem. It will help price discovery, and which will help the farmers. I mean, recently, I think about 2 weeks ago, we came out with draft rules on warehouse receipts and collateral management. It's generally positive, and I know it will just, with the renewed interest, bring NCX more up to par with some of the other exchanges that will see increased activities on them. And if I may just add on the commodities, in the commodities space, things are picking up quite encouragingly on that side of the fence. You have different indices now being tracked. Export grade, you have different facilities in terms of warehouses now mapped across different parts of the country. Because of those activities, first thing is an exchange. Then if you look at it, if you do like a backtrack, for you to exchange something, that means that product will exist. Who provides the product? The farmers. The farmers. So the farmers have accessed some funding from the CBN. So if they have ready place to deposit and exchange for money, that helps the system. And if in the capital market, people are ready to trade on any security that is formed on the back of those commodities, I mean, it's a win-win for us all.
Because the CBN would also encourage acceptance of warehouse receipts by banks as collateral moving forward concerning the reposition of the NCX. Let's see how that goes. Let's talk about, still in the commodities ecosystem, Lagos Commodities and Futures Exchange, because you're also seeing exchanges coming up, even private exchanges with a settlement period. Is the SEC also encouraging a proliferation of exchanges around the country, apart from the government's NCX?
Well, I wouldn't use the word proliferation, but we encourage. Because to be honest, it's very wide. I mean, before now, we knew Agric was one of the largest employers of labor before services overtook it. So for Lagos Commodities and Futures Exchange, yes, it brings a new twist to the table. In addition to traditional agri-commodities, is looking at the extractive industry. I mean, recently we considered its application for inclusion of gold in the parade of commodities it will be trading on. So largely we have others that are just coming. We have others that have applied that we're considering. Because one thing that is, or several factors that is quite important. 1, capacity. 2, capability. Because you must fit into the ecosystem. Everybody knows its place. There are rules you must comply with. So it's not just, maybe I could just use this opportunity to just delve into the revalidation of registration that we came up with late last year, which commenced in the final dates for compliance. Is, gone is the era where you have a registration or a license from the SEC and you just go to sleep because you fit into part of an ecosystem. and that ecosystem must work. Your own output is the next person's input. And we don't want to stop the conveyor belt halfway just because you're dormant. If there's anything, we engage you, find out how we can help. Is it our regulations? Is it the environment? How can we help? But if it's a matter of insistence that, okay, I've just had this, I'll just leave it and just move on, it's something we're actively trying to discourage, because it reduces the level of prosperity of the active and serious participants in the market.
Let's talk about the non-interest component, the capital market, because I know that we have some non-interest institutions, financial institutions listed on the exchange. Is the SEC happy with the, with what we're seeing around non-interest financial institutions or non-interest capital markets instruments? Yes, that's the word I was looking for. You mentioned Sukuk earlier. Sukuk, of course, is a non-interest. So what's the Securities and Exchange Commission also doing to encourage this?
Okay, so what we're doing is, one is education. Yeah, and not education for the investing public, even for the potential creators of the instrument. I think like a couple of weeks ago, we had a training which involved some capital market operators directly with the Islamic Financial Services Board based in Malaysia. And that's one of several different education platforms we try to create. Now, non-interest capital market products is one of the most reliable ways we can use to augment or actually resolve infrastructural deficits in the country. And we see that. I mean, many platforms across the government see that, and talks are going on, multi-agency discussions are going on. So we can develop, one, this sector of the capital market, to activate it. You could just develop and it's not activated. Nobody's operating in it. So two things. There must be a buyer and a seller. First, there must be a product. So who creates the product? What do they know they are creating? Given the peculiarity of us as a nation and an economy, the kind of income we have, what kind of product should they be creating? What kind of tenor should they be looking at? Then what do we look to resolve? What kind of infrastructure? You can't structure like a 2-year instrument and expect it to solve a 30-year problem. You understand? So that's part of where education fits in. Two, engaging at multiple levels. Yeah, because the people that will bring the products, that, okay, I want to create a sukuk to do X and Y. Should there be a tax benefit for me? Will I get any incentive? Will there be a waiver of any sort of fees? Or so those are things we're looking at to develop. So back to to reiterate, is we definitely could do more. We're taking baby steps, but now we want to go into more wider strides.
Do you think the developments we've seen over the years on the Islamic market or the Islamic products that we've advanced? Because I know the history for quite a while. We've seen also some Islamic banks coming on board, some also being listed and all of that. Are you happy, when I mean you, the regulator, are you happy with the development of progress so far?
More could be done.
Okay.
Or not just more, much more.
Much more
could be done. So the question is, what are you doing to encourage the much more? I mean, we left, I don't know if you remember when the Osun Sukuk came.
Yes.
Then it was an eye-opener. And again, we've now left it being an Islamic product, so a non-interest product. Because if you go even to London, for example, I mean, the tons of the capital market products revolve around non-interest as well, and what it could help you resolve, because it ties revenue streams from the project or whatever you're trying to do to the product itself. So it's your goals and what you look out to achieve are seriously aligned.
Lastly, let's talk about the pandemic. What kind of appeal did the Securities and Exchange Commission come up with, at least to alleviate the effect of the pandemic, perhaps even on stakeholders? But it was so ironic for me that last year, the Nigerian stock market finished
very strong.
And I was wondering, when we're all on a lockdown and the market, but are there some kind of actions that the Securities and Exchange Commission is coming up with?
So I won't say just coming up with, I'll say we'll continue with. So on the, should I use the word humanitarian side? We coordinated not only the regulators, even the capital market operators. And we did some significant contribution in lending our support to citizens of the country, of which we are ambulances, face masks, and one of the things is it's been proposed that there's going to be a fund which will look into the healthcare sector. And those are more like on the softer side. Now, when it comes to the impact, like I mentioned earlier, COVID helped check some, shall I say, ideas we've had. So business continuity. So if anything does happen, it might as well not be a pandemic. It might just be any acts of God, as they will say. Will you still be able to function? Check, yes. Using technology, check, yes. Now, when it comes to markets, the market actually never slept. It should be surprising to you that collective investment schemes actually grew leaps and bounds, almost 47%. Stock market, just as you said, 50%. So it's largely, okay, like I said, is the human interface of the developmental angle of the regulatory function that was a bit impacted. Okay, so the fund you were talking about is the 100 billion naira fund for investment in healthcare assets in Nigeria. Correct. All right, I think we'll leave it at that. Thank you very much. Thank you very much for having me on the show. I was speaking with Dayo Obisan, who is the Executive Commissioner, Operations, Securities and Exchange Commission, and we've been talking about the CMC meeting, outcome from that CMC meeting. That's the much we can take on today's edition of the program. Thank you all for watching. I am Nnaji. Be the best you can be and be that change that you want to see. Bye now. Thank you for watching our video. Please hit the subscribe button below. Turn on post notification to follow all our updates.